So options are something that
Yeah, that hey everybody. Yeah, that OPAD. Every breakout on OPAD today looked awful, awful. Every single one. It would break and then just rip back. Every single one. That was just looks awful. A lot of traders, a lot of pro traders all over the net have been posting about how the market's been really, really difficult the last couple of days. Meanwhile, we've been doing pretty good. Is everybody here? Can everybody hear me?
Here we go. This is a better mic though, right? Here we go. I just switched over to this mic. Is this mic better? Oh, ranging and chop. That's cool. I'm glad that lesson's in there. So many good lessons in there. Fine. Other mic was better. Really? Than this? I think most people prefer this nice unechoey mic compared
This mic, which is the other mic now. Now I'm talking to the other mic. What do you guys think? What do you think of the other mic? Or should I go back to the
headset mic. Now I'm on the headset, talking through the headset. What do we think of the headset mic? Okay, headset. Okay, everybody says headset, see? All right, Jackson. What do you guys want to talk about? I mean, we're not going to talk about stocks. We're here to learn. It's going to be theory, always theory tonight. This is theory class, stock trading. So we're not like doing like checking out a stock. I mean, we will to show some theory on how to do charting. One thing that we sometimes do is review someone's trade which just went awful and they feel bad and they kind of know what they could have done better, but maybe not. We can review it and kind of examine like what would have been the right way to do it. Somebody says finding swing trades. Somebody says how to understand volume. How does the market typically behave on quadruple witching days? Any patterns or behaviors to watch for? I don't think there's really too much beneficial to discuss on that. I can teach you guys stuff, but it's just not much beneficial really. There's no benefit. I mean, so I probably won't go into that. I just played it stupid. F-Cell today. Win, Jamal. Marco, what is quadruple witching? Kathy Baker says options, volume sounds great. You know, what I can tell you about volume, I've probably told you before. So I'm not quite sure that there's going to be a whole lot that I could tell you about volume, but we could do like a little 5-minute thing about volume. What was the other one you said? Other one sounds like you're on a toilet. That's funny. Finding swing trades. Finding swing trades. Yeah, that is so fucking subjective. But we'll try. Maybe we'll do a little bit of finding swing trades. The path of victory. What about the path of victory, Jamal? More on finding good swings and entries. Solomon wants that too. So we got two people asking about how to find good swings and entries. PJ, can you go over how you knew the sellers were dried up on Asana? That's worthwhile. Yeah, we could check that out. It's probably worthwhile examining that. That will be productive. When to get out of options. Some of these are like really good, and I don't want to forget them. I wish there was a way to like highlight them. They don't let you do that. Be able to like take certain questions and then put them on like a little bullet list. I mean, fuck. Zoom is so slow to innovate. Oh God, it's like, dude, we're in a pandemic. Like, Facebook created virtual reality conference rooms. Zoom, can you do something with our fucking money? Fuck. Other than creating like another setting, they must have 400 settings. Have you seen it? It's ridiculous. Oh my God. Anyway, when to get out of options. Okay, listen. Kathy, you had a question about options and when to get out of options. Let me explain this to you guys. Options. Does anyone know why? Let's do it this way. Who can tell us, or what do you think? Is it that makes options change price? Is it supply and demand on the contract? What is it? Supply and demand on the contract? Is that what makes the options change price? Okay, Kathy says no. Right. So Kathy, when to get out of an option cannot be answered. Are you starting to get where I'm going with this? When to get out of an option is never. Does when to get into an option have anything to do with the option? What do you guys think? Does when to get into an option have anything to do with the option? No, correct, Sergio, correct. No. So does when to get out of an option have anything to do with the option? Right. So we can't really even, that question is, by the way, there definitely are no dumb questions, they say, right? Maybe there are. Okay. I probably actually would say that there are. But that one is not a dumb question because it's actually kind of smart in that it helps us realize that the answer, it doesn't lie in option land. You use options merely as a tool to trade stocks. Okay? And so when you get out of an option is when you should be getting out of the stock. So maybe you meant to say that, or maybe, this is like, oh yeah, that's true moment for you. I guess so. I guess I didn't really think about that. Maybe because you heard on other boards and other traders saying like, oh, I always get out at a 25% loss, or I always get out at 50%. I don't let it go drop below 50% loss. Maybe you heard something like that. Look, the option, it's like money. It's that same thing I always say. The option has no idea when to get out of the stock. Only the stock does. The stock price is driving the whole show, the whole game, is the stock price and the stock moving around, right? You said, so as long as it goes over, then stay in. As long as the price goes over, then stay in. No, it's not that simple. Kathy, haven't you been with us for a while? I think so. It's not that simple. I mean, a stock goes up and down and up and down in its progression of going up, right? If a stock's going up, 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 sometimes it's going down in the middle of that, right? It's going up and down and up and down and up and down. It's going 10 steps up, 5 steps back, 10 steps up, 5 steps back, 10 steps up, 5 steps back. And now in total, it's like 20 steps up, right? So there's no thing that options are doing that could ever tell you when to get out. It has to be based on the candlesticks on the chart. So, basically, you need to learn chart trading. So you need to continue to learn that. Kathy, have you taken my market mastery classes? There's some, I think, really good classes probably in there on chart reading, and you just gotta get really, really good. Oh, good. 3 months of it. Good. And some of them are on entries and exit techniques and stop techniques. There's one, the dream stop, right? But there's other stop techniques and pivot point trading when things break down. There's levels and prices. Those are the moments in which you sell. Those are the moments which you get out. Look, if you want a position on Asana, this one that I have on here, Asana, you can get 50 shares, you can get 30 shares, you can get 150 shares, you can get 100 shares. You could get one option contract of 100 shares. You could get 2 option contracts of 100 shares. You could get 200 shares or 2 option contracts of 100 shares. They're both 200 shares, right? So what you're doing is you're taking a position in Asana, but you're doing it with either stock company business stock share certificates, shares, or option contracts on shares that someone's going to promise you. It's the same thing, but you're taking a position on Asana based on your thesis theory that, in this case, like Asana is going to go up, right, or down if it get puts, right, or even stay the same with advanced option trading. But that's way down the line for you. Maybe several years. I recommend probably you get better at vanilla options first. So, trading options. When they say, hey, you want to learn how to trade options, really all that's happening is learning which buttons to push. That's what learning, when they say, I want to learn, like there's maybe a course or something that says learn to trade options, right? There's no strategy in options that could work without looking at the stock chart. I'm not talking about the options chart. I'm talking about like the stock chart, like this one, like Asana. Options cannot be traded on the basis of the options. So what I'm saying is when they say, hey, I want to learn how to trade options, all you're going to learn is jargon so that you can make choices. You're going to learn what buying to open a contract means. It means buy to open a position. You're going to learn selling to close. You're going to learn all that stuff. You know what I'm saying? And so options are merely, it's almost like learning to trade options is like learning to trade stock shares. It's like the buy button, the sell button. And then, you learn the stuff about the delta, what it means, theta, and all that stuff only informs you. This is the amazing thing. Like all those Greeks and those metrics and stuff, all they do is inform you if that's a good decision. The option contracts itself and all those metrics actually cannot tell you that. They can only tell you the current state of all those metrics. And then you got to say, like, based on what I think the stock is going to do, that sounds good. That's a good match, right? Then the stock goes and it does what you hoped. And now because you made a good decision on a match for what you had hoped the stock was going to do, you got into the right like option contract, with the right metrics, and the option just does its fucking thing all on its own. It just kind of bubbles up in price, and it's not doing that though. The stock is making it do that. The stock's change in price is making it do that based on a mathematical formula that contract has in it. That's complicated stuff that's way under the hood, but it doesn't matter. My point is the contract, if the stock doesn't change, contract doesn't change. Basically the option doesn't change, I mean. And knowing about options is what learning to trade options is all about. It's not actually any strategy, like a particular strategy. Yes, maybe there may be some strategies that, if you think about them in options terms, work best depending on how the stock chart moves. But it's entirely everything. I mean, I'm probably, I'm just really drilling it down, not just for you, Kathy, for everybody, that every decision you make is going to be based on what's going on in the stock price, not the options, and that being smart about option choice and then understanding those metrics so that even while the stock price is making progress, you can actually just monitor your options. And you can be looking at them and going, what the fuck is going on? Instead of being like, what the fuck is going on? You can be like, oh yeah, that's because I got this one at the money. And so theta this and delta that and this or that. But there's nothing you can do about it. You can just understand it. Then you hope something will go on with the stock because nothing's going to change in option land. And then when the stock reaches its point in which you wish to end the trade, then you go over to the options and you close it out based on how you learn to trade options, right? But there's nothing you can do to the option. All right. Did that kind of like demystify something that even if you probably didn't need to hear that, maybe you needed to hear like 2% of that. All right. All right. So, but I mean, like that was an easy one to answer. So I wanted to start with that one. All right, let's roll back up here and look at some of the questions. Most people in this class are probably interested in swing trades, but Eric, that's the third time you said that. And options, because they have a better return. They have smaller accounts and slower systems. Oh, well, sure, right? Eric makes a very good point. Swing trades are really great for those of you who want to make money on the stock market, but day trading is very daunting. Look, depending on how you got sucked into my ecosystem and then this ecosystem with the group and everyone here on the Discord and whatever this is and however this metamorphosizes over the years, what we're together, it's this group. However you got sucked in here, it was probably mostly under the premise that we live stream day trading every day, right? But maybe as you started to learn more about our server, you realized we also alert swing trades and some other traders, lead trader analysts in here, signal swing trades as well, outside of myself. And however, I think it's great for you to just paper trade the day trading thing for a while and then just have your savings, your money, like if you have $10,000 or $1,000 or $30,000 sitting there, apply that to the swing trades or perhaps just some very basic safe investments that, in a couple of months or in a half a year after you've been paper trading the day trading thing for a long time, maybe you're ready to take some of that money now, convert it to real money and give it a try, right, with the day trading thing. I think, that's the right way to go. I mean, I can't highly recommend paper trading enough and not fucking around with day trading. Day trading, it's so sad how much money is lost in day trading, or people who, I think, after they lose it all, realize shit, they should have learned more and not did that. You know, that's wrong. Like, I wish there was a way to communicate that more to people. Like, look, it's very hard to make money on the stock market, even for pros. Pros do it, but it's not easy, right? You are most definitely going to lose all your money day trading. And if you day trade options, it's like, let's have a party right now and celebrate the fact that you're going to lose everything, right? Let's all agree on that. I think we can all agree that if you're new to options and you're going to try day trading them, and you're new to day trading and you're new to trading, that in the next like few weeks, you're going to have lost like 75% of all your money. Do you guys agree? Some of you who've been trading for a long time, are you like totally in sync with me on that? Yeah. See, Eric says he already lost 65%. So it's like, it's like, I can't, what is it? Sell it enough that it's very, very important that you, if you're going to learn day trading, you start with paper trading. Or here's another idea. Let's say you have $30,000 and you want to learn day trading and you kind of want to do it with real money. Only use like $3,000 of that. So you have 30,000. Only use 3,000 with our 1% calculation. Like, you don't even have the rest of that money. You just use like 3,000. So the 1% will be $30. I say the risk is $2. It means you can get 15 shares. So you buy 15 shares, now you're day trading with 15 shares. And like, you're only always risking $30 every day instead of 10 times as much. So anyway, I forget what I was getting at, but yeah. So what I'm getting at is that, yes, Eric has a very good point. And it's that swing trading is a great way for you to, with low stress and not optimum setups, and not having to worry or be pressured about the speed of entry of your orders, a great way to kind of get your feet wet in the market and maybe make some money. Nothing's a guarantee. Every day you have a spectrum of results on the same exact stocks that I'm calling out, right? I mean, some people lose money on them, others win money. And so I can't guarantee anything for anybody, but supposed to, if things work out properly and you kind of, actually do things right, you have a very good chance. Now with swing trades, it's a lot easier because you can just put it on. It takes maybe, what do you guys think for beginners? 15 minutes to open a position. And then you can go back to life. You could just, that's it. You walk in, Evan put an alert and you wanted to get it. And so, you log in, you're kind of new and you're like, is this, maybe you send me a message, is this right? Am I doing it right? And you get it. It's like 15 minutes went by. That's it. You're done. Now you can go to, the grocery store. And then in a couple of days, the thing either didn't work out, and so you're supposed to sell it, and then that takes like 15 minutes, again, 10 minutes. Maybe you get in there and you're like, sell to close, or sell the position, and whoop, it's gone. Or it went up and, you made money, and then you're supposed to sell it, and then you sell it and you made money. And it's very low stress, right? Very low stress. So, Eric has a very good point. And, philosophically, you guys should dig it, use it to your advantage, like to de-stress, possibly some of the stressful trading you've been doing. Time seems to move in slow motion while the market's open, having a position open. Love your alerts. They're not always cheap, Eric. No, they're not. Like today we had a $1,900 swing we opened. So anyway, all right. So in the Market Mastery course, and somebody just dropped that link now. because maybe some of you haven't taken it. In the market mastery class, there's a section on swing trading. And one of the best methods that I recommend for swing trading is channel trading. Okay. So like you find a stock that's moving along a channel like this one here on Target. Hopefully you're seeing that. I'll grab a parallel channel, and Target was on the top side, hitting that top line, and on the bottom side, kind of always pulling back to that line, right? So, there's a strategy there over in the market mastery, okay? Which no, Buzz, no, and that's just a lot of market voodoo. You're going to get yourself into like, we'll talk about that in a minute. Yeah, no, just forget about fibs. So anyway, there's a swing in the swing trading section of the market mastery. There is a strategy there, and it's called channel trading. Okay, swing trading strategy number 1, channel trading. If you learn that, what's set up in there, and it shows you how to find the stocks, how to look for channels, when to get in, when to get out, when to double up, how much to buy, et cetera, et cetera. If you get that down, you can have 10 to 20 positions on in your portfolio at any one time and just be making money. My swing tradings, what did I just say, Buzz? I just said, let's forget about fibs. And here you are trying to tell Jamal what it is. Fuck it. We're not going to go into depth on that, and don't start telling people about that. No, forget it. We're forgetting about fibs. All right, fibs is voodoo. We don't want any of our other students going down paths that are going to make them worse traders. You, Buzz, need to forget about Fibonacci's and don't tell other people about them. All right. So anyway, listen. Look, when something retraces, it retraces a certain percent. The whole idea that it's a Fibonacci number is ludicrous. Next. Now, so channel trading is one swing trading technique that you can completely learn in that market mastery class. Somebody dropped a link again. Let's keep that fresh. The fact that for fucking $7, you can learn how to start making thousands of dollars by learning just this one technique, and so easy. Another technique that's not in there is one that I think I did teach like 2 months ago in one of our Thursday night classes, maybe 2.5 months ago. I think PJ was here. A couple of you missed it. It didn't get into the replay ecosystem. It does exist in the recording on my drive somewhere, so I will cut it up and put it in there. But another method is to find trending stocks. So let's say like Agilent here, okay, which has been going up and up and up and up for a long time, trending, right? As you can see, trending stocks, and then finding moments where it'd be advantageous to go ahead and get in. And that's partially has to do with the volume question that some of you asked about earlier. How did I know, like on Asana, things had dried, seller side volume had dried up? I could pull that up in a second here and I'll show you. But I did already do a whole like kind of class on that. So I don't think going to like go into as much detail as I did before, but this also can go towards some of you were asking about entries, how to know to get into where to get into swing trades. So there are, depending on how the stock is running, there are some spots. So here's one, getting down to the actual brass tacks of things here. You got to learn pivot point trading to understand these lines that I'm drawing. Okay, so that's important. Good to learn pivot point trading. Wow, that was quite a run before there was any pullback over there. Yeah, but that's enough. So one of the ways you can get into stocks that are trending are when they break a new high along a trend that they're in. So, like for instance, this is an established high at that point, okay? And after it's pulled back, that's when you know it's an established high. It's a pivot point, okay? Then eventually, when it starts moving back up again off of a bottom like that, once it breaks that level, which was happening right there, that can be an entry. Okay, right there at that price, just as it starts to go up, for the risk down to the bottom right there. So in this case, you'd set your stop to 128 and you would have entered at 138 approximately. So $10 of risk. $10 of risk is right there in that range. So you take, like, let's say you have a $10,000 account and you want to put 1% on this trade. You take $10,000, 1% is $100. It's $10 of risk. You divide $100 by 10, you get 10 shares. So you can get 10 shares of this, and you get the 10 shares, and the stock goes up. And so far, you'd still be in the trade until it dream stops out, probably, which was right here. But then the next day you get back in. So that's kind of here nor there. You can learn about the dream stop in the Market Mastery. And yeah, it basically brings you all the way up here to about 178 from 138. That's 40 points. 40 points over 10 is a 4-to-1. So you got a nice 4-to-1 reward out of that risk on that trade. That's one way you can get into trending stocks, is after they've pulled back, they go back up, and then they re-break out. It's very similar to what we do on our day trading, except we're doing it on daily charts, because this is pivot point trading again. Daily, every candle's a day. Like, it's all good. Listen, I thought it'd be a 7 per week to whole knowledge book for a week to study. Yeah, this is the day chart. Yes. Okay, so now, so that goes to show you in both those cases of channel trading or getting into a stock that's trending and running, right? Those are two different stock qualities that you're going to be looking for. So when you're using a screener, you have to know why the fuck what are you looking for? So like Eric, you've asked me many times on private message, like, what are some screener settings to find swings? It's not that simple. You need to know what you're doing. Like, what are you trying to find? You know what some swings are? Like, for instance, like, did you see that latest video I did, which said that the 3-day crap out? Did you see that? Did you see the 3-day crap out? Yeah, I am going to do that, iPhone user. Did you see that little 3-day crap out TikTok video I did, Eric? Or Wednesday, I actually talked about it, the 3-day crap out when the thing gaps up. Okay. Okay. That's a swing trade technique. It's for, you get in between 1 and 3 days for a crap out. So you buy puts. So when you tell me, hey, how do I find swings? I don't know. Are you looking for something to go down? Are you looking for something to go? What strategy are you hunting for? You have to know. You have to have a whole strategy first before you decide to look for stocks that'll match the setup needed for that strategy. Does that make sense? So in the Market Mastery, there's a section on swing trading, channeling stocks, and in there it explains how to find channeling stocks. Like, I'll just show you so fast, but it's like a 40-minute class. Show you so fast how we do it. You go to screener, and don't ask me how. You go to screener. Don't ask me to repeat this. You go to screener. You go to technical, because it's in there. You can go watch the video. You go to pattern, channel up strong. You go to charts. Boom, you're done. You have tons of 23 pages of channel stocks to invest in, to go make money on. Go make money. Ready to go. If you want to learn how to do that, $7, my market mastery class. You can learn it in depth, with pinpoint precision, how to trade that strategy. Get into stocks that are going up on channels, and when to get in and when to get out. This one, where we're trying to find stocks that are running and trending, that's a different screener. For that, and I'll show you how you do that right now over in TradingView. That's going to be different. Here we go. I'm going to get rid of that. So hopefully you can see this. You pull up this panel underneath, and then you bring up Stock Screener. And then you need to click Filters, and just go ahead and reset all the filters. But here's what I have for mine, for finding a trending stock. The symbol needs to be stock. The exchanges are like NASDAQ, NYSE, and ARCA. Am I missing any? And not OTC. Forget that. And then the market cap, 600 million and on up. So the big stocks. You're looking for stocks that, like the reason Agilent is, half of the reason Agilent is going up is because Bill Ackman, it's his number one holding, or was. And if you were to look at the list of institutional holders, it wouldn't be just like 2 or 3, because it was a very unknown stock like Palantir or something. I mean, Palantir is pretty known now too, but it's still way too new. Okay, but let's say it was, a 200 million cap, 200 million market cap type stock. It's not going to be that popular. It's not going to have. So the reason I chose 600 million on up to, greater than 2 trillion for Apple and stuff like that, is because they're going to have thousands of institutional investors. I'm talking, the companies, JP Morgan, Bank of America, and their hedge funds. And there's going to be thousands of institutional support. So what does that mean? It means the stock isn't going to go like this, and it's going to rug pull on you and crap out, and it's going to run like Agilent is on this screen. You see, it's going to have an excellent opportunity. It's going to be monitored by hundreds of analysts, if not maybe thousands of analysts. It's going to be talked about. It'll be in the news. It's worthy. So that's another parameter, is market cap. Everything I just said just now was about market cap, okay, and why we choose big stocks and not shit stocks. Okay. Now over here, where it says last, that means the last price. So what I've got set here is also, it says also show me only stocks where the current price is above the 200 moving average. Okay, is above the 200 moving average. So that means it's above that long term. I'll show you the 200 is here. It's the blue line, blue. Okay. Then on top of that, I wanted to make sure that whatever it is here, that the 20 moving average, that's this yellow one, is above the 50 moving average, this orange one. If the 20 is above the 50, then the stock is going up. If the price is above the 200, the stock is going up. Another one I have here is that the 50 is above the 200. Another one is that the 100 is above the 200. So what is happening here? I'm saying in my criteria for my stock screener, please make sure that all the moving averages are above each other. and that price is at least above the 200. It could dip down into the 20, maybe accidentally pull into the 50 like it did here. But I'd like to see it. Like I'd like to see that stock, whatever it is, right? Then that's it. That's it. That's now you found trending stocks. Pretty cool. What you do now is you have a huge list. So you click refresh on TradingView or whatever you think. It says 890 matches. Then I click market cap and I start to look from the biggest market cap on down. So 2.46 trillion. So we click on Apple. And Apple is trending. I'm going to get rid of these lines. Okay. Apple is trending, but it's not as beautiful as Agilent. Do you agree? We'll go back to Agilent. Look at how reliable Agilent looks. How fast can you see that? Like if we go back to Apple, look at Apple and realize your brain can do amazing things. Right now, looking at Apple and comparing it to Agilent, do you think your brain can tell you that if you put your money into Apple, it's most assuredly going to go up right away and keep going up and not go down? Or can your brain tell you that there's a certain percentage chance maybe that if you get in based on this chart, it's likely that maybe Apple's going to go down for a while. Could be half a year after you get in. Like, can your brain see that? And so what I want to ask you now, because this is amazing. We have amazing brains. We have like supercomputer brains, right? Tell me, what percent chance on Apple can your brain come up with? What percent chance on Apple do you think if you get in, do you have that it's just going to go on a run versus not? Let's see what kind of answers we get. Look at these answers. Aren't these amazing? You guys are amazing. The brain is an amazing thing. I didn't code your brain. We didn't code your brain. This is not a program. You're actually spitting out numbers. And look at you guys. Like the hive mind is agreeing about 30%. Isn't this amazing? Because watch this. I'm going to change the chart. And I want you to give me an answer on this one. And this is Agilent. What percent chance do you think if you get in here, it's just going to keep going on a run now? 30%? 80%, 75%, 80, 99. Okay, see, this is amazing, right? So that's what you do. That's what you do, is you now go down the list, okay? I have 890 tickers here. You know, on the days in which I spend the most time trying to find you guys swings, I can go through 500 to 1,000 tickers before I give you 1, 2, 3, 4, or 5 swings. So this is what you do now. You just start clicking down the list and you go percent chance probability that this is going to be worthwhile getting into. Apple, 30%. Fuck it. No way. Microsoft. Let's get a hive brain analysis on Microsoft. You guys, I'll give you a second to come up with a percentage chance on this one. Feels pretty good. 70%. It might pull back a little, but it's not going to be for long, is it? You can kind of say to yourself, if it does, it's probably going to keep going up after a month. This is a real troublesome spot, right? It took a while. It took like 4 months before it started to keep going up. So maybe 55%, 60%. Do you see what I mean, Christina and Chowder? Do you see what I mean? Like how it's not just total progress. Sometimes it goes into these funks. Maybe it wasn't like Apple where it's going way down, but it also didn't make your money appreciate, right? So now give me a number. Now, what do you think, Christina? Now, what do you think, Chowder? Based on the fact that it's not making progress sometimes. Maybe it's not falling. Fine. But also, I'm saying, what are the percent chances just gonna run? %65%, Chowder. Good. See? And this is an analyst. This is what you guys are doing. You're kind of like learning how to analyze charts. All right. So now we're going to keep going. Google. This is probably going to throw you off a little bit. Okay, there we go. Google. I'm going to go with, and I'll look at your number in a second. I'm going to come up with my number. I got to say that looks pretty good. I'm going to go 85%. What do you guys think? Dude, Andrew and Mike, exactly. I think so. Like 85%, right? Especially lately. Like it improved lately, right? Are you noticing that? Like that's something I thought. I was like, okay, maybe it used to be 75%, but it's gotten pretty tasty. It's now about 85%. 84.9. Yeah. And so this is what you do. So remember, I just said, this is how you can find these stocks, right, to trade. But because we're looking for the strategy of things that are running, right? And then you just start going down the list and you just start analyzing these things. Facebook, maybe not as much. Berkshire, NVIDIA. NVIDIA looks good, right? NVIDIA looks good. And remember what I said, I think a week or two ago, or three, don't be fooled by the fact that on good charts, over on the right side, price is always at the top. And it psychologically makes you think, oh shit, it's going to go down because there's no more room. Don't be fooled. There's always more room. If we bring this chart like this over here, and you said, oh man, oh my God, NVIDIA's gone bonkers. I can't get in now, right? There's no more room on the chart. But your brain screws with you. It says, it actually, your visual is trying to give you an analysis. Your eyes say, it's out of room. It's going in your brain somewhere. You're not thinking it, but you're subconsciously, it's going, this is way too risky. I'm not like, I'm going to jump into like the water well. It's this hot. Forget it. So it was at 138, right? How much higher could it go? Well, let's see. Okay. If I don't change the scale on the chart, this is what happened. Now I have to pull it down. Where did it go? Oh shit. It went way up. It's 228, right? Oh shit, Dillard's is probably really good. That was the example I was gloating about the other day. That's another good example. This one went up 1,000%. It went from $21 where I invested right at the bottom to now where it's at almost 210. That's 1,000% gain. So that's what you do now, okay? Is you just go through these charts. Look at JP Morgan. Kind of unreliable. What would you guys give percentage-wise on that? That if you were to put your money in there, that it's going to start making money for you right away and go on a run. Dude, you would say 60%? No, I don't think so. Because look, I think we need to draw something here. It's been freaking inside this sideways channel since February. So care to revise your statement? It went up here. And then before that, it was also kind of in a sideways. So what's it going to do now? How much of the time does JP Morgan increase in price? 25% of the time. 75% of the time, it just sits sideways, dilly-dallying, going around. Bing, bong, bing, bong. Right? Okay? So, yeah, I mean, I really want to illuminate you guys to how to read these charts and make good decisions. You want to look at these charts and go, wow, like look at Walmart, by God. What percentage chance do you give Walmart that it's going to just go on a run and your money's going to perform so well? Right. Good job. Chowder, I'd maybe even lower, you know. I think it's a very, very low chance. Oh yeah, 15% maybe. 10%. I think there's nothing there indicating that it would. Well, just about nothing. I mean, look, that's what you can do is you can zoom out a little bit because look on the left side here, it gives you the false impression that since here Walmart has gone up, right? Right? Am I right? Like that's the left side, that the left side's a little low is giving you the false impression, potentially it could be giving you a false impression that it's going up over time. But let's zoom out a little bit. Okay, good. It actually did. Okay, so but that's what, you need to, broaden sometimes some of these charts to double check what's going on. But for one thing's for sure, it's going to take like years for you to be certain you're going to get some return on Walmart. If the rate of return on Walmart is this, oops, hang on. Right? And that is September, cool, of 2018 right here. September 2018 to September now, 2021. That's 3 years. It went from somewhere around here in the middle in this average price. It went from 97 to 145 in 3 years. Okay, so we can do the math on this. You can look up different equations and do math on this. But look, what we do here is you go 145 divided by 97, and we already get that that's a 49% return over 3 years. 49% return over 3 years. But while I'm doing this calculation, I want you to think to yourselves, but how much heartache did that include? Like, were there any periods here where your money went down in value, and how long did it take for it to get back to where it was and continue? Look at the chart there. Think about that. How much heartache, did it give you? And what I'm going to do now is I'm going to do the to the power of 1/3, which means that'll give us the compounding annual return, 14%. Okay, 14% return is what you got out of Walmart. 14%. Hey, that's pretty great. I mean, if you can beat 7 to 10% in life, that's really great, right? But yeah, your money suffered a lot. And can you get maybe 10% return with a lot more certainty? Yes. Can you get 6% return with almost absolute certainty? Yeah. You can start to get into like treasury bonds and municipal bonds. There's municipal bonds that'll give you 11%. They're fucking like AAA rated, like they're 99.99% risk free. They're like guaranteed practically. Municipal government bonds, right? So why would you get into Walmart? The rate of return does not match the risk. You can get the same rate of return for what? Lower I'm asking you guys which word. You can get the same return for lower risk. Thank you. Maybe there's a little lag in here. Lower risk, right? And that's called the God, why is that escaping me at the moment? I guess just because I'm just not all there right now, late at night. The Sharpe ratio, I believe. Okay, so you can look that up. Get rid of that. Maybe in a new tab here, I'll just pull that up. You can get a little information on that. Sharpe ratio. There's also another one, but let's go in here. The Sharpe ratio is it helps investors understand the return of investment compared to its risk. The ratio is the average return in excess of its risk. And so not to get too complicated, but it's basically what I just said. Okay. So you can do these kinds of things and you can say, Walmart, I should never be in it. Forget it. Moving down the list, there's lots of things illuminating here. I'm going to go up and I'm going to answer your questions in 1 second. UNH, let's zoom a little bit closer to get just 1 year. UNH, kind of a no-go on UNH. Home Depot, that's not the kind of consistency I'm looking for personally. Look, the scan gives you a nice, good pot of things that are going up, but you have to use your brain to turn that into even better decisions that the computer could never know. That if you asked it to give you those better decisions, it might not even give you those stocks because what they call like false positives or false negatives. Your scan needs to be broader than your needs. If you scan for just your needs, you will miss little outliers, which would have been actually, if on your own brain's analysis, excellent picks, and you missed them. So you have to make sure your stock scanner is kind of broad. That's why I don't put a ton of parameters in. Oh, and it's up today, and the relative volume is this or that. I don't give a shit what the relative volume is, because what if yesterday was a great day to get in, and I just missed it by 1 day, and today it actually went down, but on high relative volume, I'm now getting a better price than yesterday, but I can't even see it because I put relative volume such and such parameter into my search, and it disqualified it for my search, and now I'm not even looking at that chart. So that's a decision I'll make on my own. You see what I mean? You want your screener to be really broad and for you to be making the smart decisions, not the screener. Okay? So in your brain, this looks good? No, this is not good. Why? Because there's no consistency. In fact, it went down for a long period of time, and then it did it again, really. And then perhaps you could say that lately it started to top out over here. So the only periods of really incline right there, right there, right there, and this was probably a topping region too. So what percentage of the time is this not making progress? What percentage of the time is Home Depot over the last year and a half not been making progress? Let's call it this region here. No progress, right? So then let's flip it around, right? And now ask the counterpoint question, which is what percentage of the time, therefore, did it make progress? And you could double check that, because I think maybe it's not even 20%. I think it might even be less, because if you really are talking about the time that it took. So like from here, vertical line, come on. Here to here, I had made progress. Come on. It's so slow. Am I lagging? Am I getting cutting out? Yeah, so, 20% maybe might be good. What would have been cool is if I had used this one that fills up the space. Look at this. Oh, this is really illuminating, isn't it? I'm such a visual guy. I love this shit. This really can make it click for people. That's how good Home Depot is. Right? The rest of the time, it's a waste of your time. Now, how do you like Home Depot? Now, how do you like them apples? I don't like them. I don't like the look of that at all. If you saw this chart, How much you liking it? We got to go back to Agilent and do this on Agilent. This is far more illuminating, don't you think? This is like, wow. This is really going to maybe hit it home for you guys now. How much time do you waste in Home Depot if you invest in Home Depot? Look at that. Look at that. Such a waste. How many times do you have to be right on Home Depot? How many opportunities were on Home Depot in the last year and a half? 3. How many swing trade opportunities were correct on Home Depot in the last year and a half? 3. How many, if you loved this stock, because somebody here said, I like this stock, what about it? How many times would you have tried to enter and maybe got stopped out on Home Depot in the last year and a half trying to catch these 3 opportunities? I'm going to say maybe 10, right? You're not going to just nail these 3. There's no way. So that's what makes this stock unusable. Unusable. So you're starting to see we need a stock that just consistently goes up and up and up and up and up, so that every time we try, we have like a 90% chance of being right. That's going to be way better for us, right? So yeah, I think, does that make it make more sense? Isn't that awesome? I really liked coloring that. That was really good. Let's see what you guys say for just a split second. What did you think? Did that change your viewpoint a little bit? I think that was really illustrative. Yeah. Because what it said is, there's no way I can use this stock in a strategy. I can't nail that 3 out of 3 times perfectly. You see what I'm saying? It's not useful. Grant says, wowie. Hey, thanks for throwing me a bone. So clear this, and let's look at Agilent and do the same coloring. You guys, I only see one spot where it went bad. This is it. Pull up the red. The rest of this is positive progress because of the pivot points. It never broke a pivot. You would have been in all these trades all the way through the green region this entire time, and you could have gotten in at almost any of these points. Look at that. That's what Agilent looks like. You got to compare that to Home Depot. By God, wow, huh? Wow. So now the chances are that if you try to get a signal on Agilent, it's gonna high probability it's gonna work out. This is a quality pick, right, to play with, and that's the difference. When we're looking at these charts, that's the big difference. And I wonder if when we put it into the context of that, if we get higher numbers. What did you guys say Agilent was earlier? I think some of you said 97%. Some said 90%. I might have said 85%. I forget, but it's way high, because now that you look at it, it's probably like 96%. Yeah, really, really good. What was that other one where it was really, really improving lately? Oh, Google. So Google broke pivot here. I mean, I can do really fast analysis on this shit. Google broke pivot here. So this was kind of a bad pullback until it got back on track over here. Kind of went sideways in this region here. Sideways in this region here. But pretty much the rest of it was pretty decent. A little bit sideways here. Okay, so now if I were to color this, I'd say pretty much that all that is green. That's got to stay red through all that. Undo that. Okay, and then the red regions would be here. So Google became good lately. It wasn't superb for a while there. This should be a freaking technique that we teach because this is so illuminating. Yeah, find those ranging regions, find those topping regions, find where it finally gets back on track and continues. Solid, yeah. Because that's a heck of a yeah, it's quick, and that's a heck of a difference between that and Agilent. So, all right, so but that's how you can find trending stocks that are on runs, and like I said, places to get in are here. Get a white. So, like on Google, on this breakout right here, with this risk as the stop, and on then it pulls back and re-breaks right around here. This would have been another region to get in with this as the stop. Then you get in. Now, if you were already in here, and then it ran, and this was your stop, and then it ran all the way up, came back down, and you were still in it because this is your stop, that stop would have raised when it broke pivot right here at that second buy point. It doesn't have to be a buy point at all. It could just be a raise my stop point. And right there, the stop goes up. The stop goes up when it breaks pivot like that and follows through. You could almost do it again right here. It pulled back a teeny bit and then broke again. It's like a little teeny one right there. So then you can move your stop up to. You can keep doing that as it pulls back and then re-breaks again right there. Now you're able to move it up to that point. This is all in the market mastery, okay? It breaks again. At that point, you can move your stop up. So you can see this is the stop moving up every time. You know, for some of you who that's new, might be going like, oh shit, that's fucking awesome. It is, as a matter of fact. I love it. But you probably also might be going, shit, I don't quite understand that. Can you go over that again? And no, because it's going to take even more than again. What you need to do probably is do the market mastery, get in there, learn this stuff. And it's just going to be something that's going to take some time. It's going to take some weeks, maybe even months, but maybe weeks, maybe a couple days if you really get into it. And then you can understand that how that works and how to do that, because you're gonna have to. This is reliant upon you being able to do these pivot point zigzag things that I'm doing here, properly. So it's reliant on you learning a lot of foundational techniques. But yeah, you'll be able to do it. All right, so. And there's the market mastery classes. Yes. Do you think we can do a comparison with SPXL and Agilent? Seems pretty close. SPXL is doing really good. SPXL, isn't that a index? Small cap or something? It's just a 3x S&P 500, man. Although, look at that. Right? That's looking mighty tasty, isn't it? That looks pretty good. If I had to invest in something, yeah, the U.S. economy might be where I put my money. The S&P 500. The S&P 500. So this is the same as SPY, by the way. Exactly the same. The S&P 500 is wonderful because it's constantly rotating shitty stocks out and bringing in winners. And that's why it always goes up. Okay, Daniel asks, how do we find the next INDP? So he's talking about how do we screen for stocks in the morning to day trade, I think. Is that right, Daniel? That's in the market mastery, how to find stocks to day trade. But there was something that you made me think of. We wanted to look at Asana. That's what it was. So now I want to walk over to Asana and show you why I thought, because of volume, that it was time to get in. Because of volume. Take a look at the volume signature on the bottom here. So we got in here. I've done better than this. We've got another, I think ACES is a better example, but we got in right here on Asana. And basically what happened was I hadn't looked at Asana for a while, and somebody mentioned Asana. I pull up this chart and I see, oh shit, we missed some kind of explosive move. First thing I think of when I see something like that is, well, there's a couple things I'm seeing here. One is that there's this consolidation period. Do you see that? You understand that that's kind of what's called a consolidation period? Yes, I know, PJ. I'm going to check that out in a minute. So the first thing that went through my mind when I saw this late was, damn, this looks a lot like what I try to look for, which is these wave compressions with volume drying up, right? So I see this just pattern. I go, man, did I miss something? Crap, I wish I had gotten in this, probably. So I double check. That's when I go, okay, what about volume? Was it lower than normal historically during this consolidation? And to my eye, yeah. What do you guys think? Yeah, I think so. I think it could like semi-qualified, and that's why a lot of these can be is they can be I want to say that's not the word arbitrary. They can be ambiguous, subjective. Not entirely, but somewhere between ambiguous and subjective, and I don't think there's a word for it. They can be just something that like is doing what we're saying, and then there's a one bar that breaks the rule, and then some nincompoop fucking asshole idiot, new kid student dickhead says like, yeah, but what about that one bar there? That didn't line up, and I have to go and make money while that kid loses all of his money. I don't know what I was going to say there, but like, it just doesn't work that way in life, does it, folks? The older you get, the more that young, cocky dickhead gets fucked in the ass, isn't it right? Until finally he goes, you know what? I'm sick of this shit. I think that, maybe sometimes that doesn't matter, and maybe I should just start listening. Yeah, little whippersnapper. So that's what I'm trying to say, is that sometimes you have to, it's not ambiguous and it's not subjective. It's like sometimes you have to use fuzzy logic, to use like that 80s Japanese invention term, fuzzy logic. You kind of have to see through the noise. So like, look, like there was this bar here. Overall, I think, we have a couple of high volume bars, but low buying bars. We have some high selling bars, but low buying bars. That's not typically normally good. But what I did was I used like fuzzy logic. I said, hey, you know what? This whole region of volume back here during this consolidation, which actually started to ramp up in volume right there, this whole kind of region, and including here, this might have been possibly a great spot to get in, was very dry in volume. It lacked interest from everyone on the market. Asana went into hibernation, if you will. And certainly before that, things were maybe twice the volume, right? So I used my fuzzy logic, and we have some much bigger exception bars, right? And we got rid of a lot of people got out here. Thank goodness. It was like, bye-bye, see you later, right? So, believe it or not, when I did the Asana analysis, I thought of all these things. I'm explaining lots of things that you can see when you're doing analysis, right? But I see all this stuff like that. Like I'm like, there's like, they call it in sales card stacking. What we're doing is we're trying to create a thesis here. How good is the thesis here? And we're going like, well, it's got this going for it, and yeah, it's got that going for it, and it's got that going for it as well. And it's got that. So you start to stack it up, and you start to go, hey, man, there's a lot of good reasons why this is. Yeah, it's being recorded. Thanks, Daniel. Why this is working out. What about Party Boy? Is Party Boy here? No. Yeah, that'd be funny. So, and in this case, it's trending. It went into a consolidation period. Volume dried up. In general, volume dried up, but that's not really what you're looking for. What you're really hoping to find in these situations is seller volume drying up more than buying volume. But it also, goes to the fuzzy logic, subjective, ambiguous part of it, but it also doesn't matter, because if price is remaining stable, then you really don't care about those little jerks of movement in the volume. And they all sort of don't matter when it gets to a certain point. It's like it's just dry, and people are just kind of going back and forth, and it's low and dry. Okay, so continuing with this, so I saw that and I said, man, that was a point to get in. I can tell you for sure, had I been looking at and monitoring Asana, this is where I would have gotten us in. Right here, this really nice low volume bar. You know what I like train my eyes to do? I configured this volume tool to show it this way. This moving average of the volume is I believe a 20 or a 21 day. But what I configured my eyes to do is to look for, when things get really low, to look for like little black space like that right beneath the line. That little black space in there, the next thing I do when I see a black space like that is I zoom out the chart and I say, when's the last time volume's ever been that low? Okay, that's like my next thing I do. So then I draw a line and I go left. And I'm talking about seller volume. When's the last time seller volume was that low? And it's like maybe back in June, but it's still going here. And then I go, okay, somewhere right around here in May, right? And I get to that point, May. And I say to myself, okay, what happened then? Give me a pattern. I can start to continue to card stack here. Give me another thesis. What happened after volume dried up, seller volume dried up? Had I got in here, like for example, it went on a huge run, right? So I got myself another thesis going. And I can see that it's been a while as well. And also that this is, things changed recently. This stock had really started to put in some volume, and to actually have it get this low based on recent behavior is a real treat, a rare treat. So I'm still putting it all together. I do this in not trying to impress you, but I'm just trying to get you an idea of how long it should take you. Like, it doesn't have to take all night like we're doing right now. It takes me about maybe 20 or 30 seconds, right, to put together like 5, 10, 15 card stacked thesis reasons why this is looking really good. So I know I missed it, okay, because this was the one where we got in a little bit later. So I see this. I see this on this day. Actually, you know what? I think I saw it on the second day over here, and it was too late. When you have a high volume, big bar like this, one of the patterns that can occur is that it then goes on a run, okay? Only on that thesis alone, you could have gone in, right? Just on that thesis alone. You could just go hunting for these big breakout bars. Well, on high volume like this. High volume, big breakout bar. That could be a scan you do. But, I really like the fact that there was a whole bunch of other shit to go along with my thesis here, okay? But if all you had was this big volume bar, that is something in and of itself as well. And it was on earnings too. So like the whole sentiment changed. There was a lot of volume. A huge bar occurred. Usually the next day it will follow through or consolidate or slightly pull back a little. That's what I was waiting for. I was waiting for a little bit of pullback because I got in. I saw it late. I was like, okay, well then, I put in an alert. Let me know when this thing, starts to pull back. And it did pull back on this date, on this red bar. And then when it broke green bar over red, that's it. That's the signal. Green bar over red. How many times do we say that? I should have like a plaque on the wall. Green over red, green bar over red. That's the entry. That was the entry right there. And that's when I called it. So it was based on the fact that we did miss it. I could have got us in earlier from 77.50 back here on that low volume date right here. I could have got us in here. We would have been waiting. Earnings came up, 5 days later, and whoo, right? I missed it. It happens all the time. But guess what? I didn't miss ASIS. Like, watch this. All right. So wait. Are there any questions about that so far? Or I go over to ASIS. Is this your volume indicator? No. It's the one that comes with it. No, Eric. I think you're overthinking possibly adding some other things to that. Maybe. Would you get in on that volume increase, the one before the huge one? Well, like I said, I would have got in on that particular bar, that red bar. Who asked me that? Jamal? Mm-hmm. That red bar. And which is amazing because, I'm going to show you on ASIS just how amazing it is to get into a stock at that point and be so confident. Like, I could be very confident that that stock was going to pop soon. And that's what I knew on ASIS, and that happened. And you're looking at that and you're like, nothing's happening. In fact, the reason why I would get in there is because less than nothing is happening. That's why I get in, because less than nothing is happening. It's so sucked up dry that all it's going to take is a little news report, a little fluff thing, something, and it's going to take off because no day traders, nobody's on it anymore. Nobody's buying and nobody's selling. It's just sitting there on low volume. It's just trickling away. And when it put in that low seller volume bar, very, very low, I would have gone in and you would have been like, what are we doing? Like, what does he see? What does he see? And it's actually that I see nothing. I see less than nothing. I'm not seeing something there. I'm seeing less than nothing happening. That's what's crazy. And yet, boom, there it goes and runs. But it's a whole bunch of things lined up. In 40 seconds, I just put together a ton of analysis. Would have got us in. Let me double check your questions here. Look at Etsy, maybe. Is green over previous red typically only good on 5-minute and up time frames, or can it be used on 2-minute also? Yes, 2-minute. We can use it on 2-minute also. It's really great on 5-minute. Really great on 5-minute. Because seller dried. Okay, thank you. Christina says, interesting. I never looked at the volume that way. I know, right? It's fantastical. It's and nobody really sees that. This is, we're also combining a lot of techniques here. The thesis on this was a lot of things I know connecting. right? To the volume drying up, the consolidation, it's trending, it's worthwhile, it's a sauna, it's a good company. Why is it going sideways? Consolidation, this seems good. Okay, and then recently it popped, we missed it. It popped, probably going to continue. Let's wait for a little pullback. Boom, there it is. We're in, and we're off and running. And what do I think we're up like over 200% right now on the options. Okay, good. Let me move over to the ASIS and I'll show you one where we got in. It's almost prophetic, you know? It's like seeing something in the future. Like, you know, if I did get us in here, which I did on ASIS, I got us in at this almost like prophetic point. If I did get us in there, I think that was the candle, yeah. And then it went on this run. And then I said, I told you, because that's what I expected. You'd be like, oh, the fuck did he know that was going to happen? Right? I mean, you probably would say it was earnings. To me, it was not. It had nothing to do with earnings. That was just a little catalyst that bumped it along. I didn't need earnings for it to do that. It was going to do that soon. It was ripe. All right, so look, let's look at ASIS. I think ASIS, I'm hoping it didn't have earnings. So you can see that it doesn't need earnings for it to do that. That was not an earnings play at all. I had zero thesis on the earnings part of that because we got in after. Okay, so over here on ASIS, what do you guys think about down there on the volume? What on that volume chart down there? I'll turn on annotation so you guys can annotate. Where down there in volume really piques your interest? And try not to make too much sloppy movement. Just try to put a little arrow or a little dot or a little something, because a lot of you are going to be poking around in there, and it'll get sloppy fast. Be careful. Here we go. I'm going to allow you to annotate where, now that you know to look for those volume signatures, where would you have been curious? Your curiosity should have been piqued, and then you start to do a thesis. You know, when I'm going through charts, that's what I'm looking for, and then I look up at the main chart and I'm like, interesting. Okay, so here we go. Turning on annotation. Okay, go. You guys seeing it? Everybody spotted it. Good job, you guys. Christina, did you see that? Yeah, August 25. Yeah. Okay, cool. You guys see it? And it's actually got buried now. Can turn off, disable that, clear all the drawings. So yeah, let's zoom up on that. It was this bar right here. And especially since I told you about looking for black space under that, right? Because that's like, whoa, nilly, right? That looks really nice. This is like a ton, like a dream. So the next thing I do, remember what I said? The next thing I do is I draw back a line to see when has seller volume ever been that low. And that's when I get all the way to right here. December like 20th of last year. Then I say to myself, okay, well, if I had gotten in there, what would I have gotten out of it? Ooh, a nice run, a breakup, and probably a dream stop out right there. I would have got a nice run out of that from $6 to something like 1050. 1050 divided by 6. And I'll tell you something else too. Okay, so that's 75% gain. Okay, but 75% gain per year? Let's see what you guys say. From $6 to $10, this trade did this, right? And it says that's 75% gain. Is that annual? the annualized gain, 75% per year? Is that because that's how you want to always measure your performance? Kind of annualized. Was that 75% per year? Right. Dondrell's starting to get to my point here. It looks like about a quarter. Right. So it's like to about middle of maybe February 10 from December 20. Okay. Can we agree on how much time that is? It's 2 months, right? So it's like February, something like 2 months. Okay. So 75% return in 2 months. So now you take that to the power of 6. Did I do that right? I think so. Yeah. 2,800% return compounding. Yeah. If you can do 75% return in 2 months, you're going to get 2,800% return in 1 year. 2,800% return in 1 year. So we already know what kind of return we can get out of this. Let's write it up here. So the potential on this is fantastic, right? So I see that, and then I also see that this point in which things are drying up, where was it? It was this one right here. Is getting it's a consolidation period that it was in, right? But my eyes are very trained to see this. Is what's happening is the lows are starting to increase ever so slightly. Look at that. That's very interesting to me because it's like it's wedging. It's like it's wedging, but a bit of a curve. And in my opinion, it was set to soon potentially break out of that pivot high moment there that it had been bouncing off of as resistance for many months, if not half a year, right? After it had came down. So it was set up and ready. I was willing for it to make another pullback to a higher low and then go and try again like this and then make another pullback to another higher low and try again. I thought we'd be in it for a month before. It's okay. It's just like those moments when the volume dries up like that, especially the seller volume, are the moments to get in. But then you wait. You just wait because it's not going to take much. Just a little bit of a leaf in the wind of good news. And all of a sudden, there's no sellers left. No sellers left. All of a sudden, all it's going to do is go up. So anyway, look at that. We're going to zoom back on this now. Up. So what I was looking at was waiting for it to break. I was hoping that it would break this level. That's one thesis to the trade. And that it would likely run should it break that. And that it was very close to doing so as we were getting these higher lows going on. Okay. Based on that long consolidation period, we're zoomed up now. Okay. Try to remember that. And so we got in there. We got in here, and I was psyched. I remember that day. I was so hyped because look at how low that volume is. Like that sucker's dry. Oh, that's another thing you should know is that when there's a very unusually dry selling volume day like that in the consolidation period where all this stuff is setting up, right? And it's a very unusually low day like that, it's almost always followed the next day by this by the moment. It happens. It's like, I don't know why that is, but it is common when you're looking for this exact pattern. The next day is like pop, And so we didn't get it that next day, but bam, we got it the next day. And I was like, see? And there it was. And the price didn't change much, right? But I knew that the volume changed. The volume started to really kick in. And I knew that trade was going to start to take off. Because, like, if price doesn't change, but volume really kicks in, it's sort of like, ooh, it's a great analogy. It's like when you start your car super hard, but it doesn't move anywhere because of, what do they call it? It's mass. It's called, it was in that movie Explorers when the kids are in the bubble. Inertia. You guys ever see that movie? Anyway, it has no inertia in the bubble, but a car has inertia. And so you push a lot of volume and it doesn't go anywhere, kind of. It starts to, and then it gets traction and then it starts going. So that's what happened. And by God, look at that. And you got to say, like, how did I know? Like it's just going so good. It's like wizardry. But all I can say is that it's stuff I know. It's not it's completely quantifiable and learnable. It's not like some autistic thing or something, right? It's not a savant thing. It's completely calculatable. I see it. The stuff is there. The patterns all lined up. You can get good at it, is what I'm saying. It's like, it's just a technique. You can do it. Would I look at RSI at that point to confirm entry? No, it's not dependent on that. And RSI, like, maybe I will look at, I'll give RSI like 1% of my thesis. Oh, MACD? Hell no. Nope. MACD has too many false negatives and positives. Well, RSI, I give a lot more weight and power to RSI than MACD. But no, I wouldn't even look at RSI. This volume, the volume pattern going on here. Look, RSI and MACD and all those indicators, they're built on price action, the price, and the volume. Pretty much. They're all built on that. So this is like going to ground zero. Fundamentally, your indicators are going to lag by hours or days or even weeks, what you could see here. This is the most accurate, fastest assessment you can make. So yeah, ASIS. I didn't get options. Anybody get options on ASIS? I got shares. It's up. What is it, like 15%? Let me see. 21% since our entry, and that's as stock shares. It could be hundreds of percent at this point if it was options. And but the thing is that in these situations where these patterns line up like this and the volume dries up and then these things go on these runs are like phenomenal runs. Like that last run was 75%, right? That might be what we get out of this. We might get 75% out of this run going on ASIS. And also on Asana. Asana is not done. We're not out of Asana because it could keep going. There's very few people interested in selling Asana. There's very few people interested in selling ASIS. The reasons why people bought ASIS up here are not because they want to sell it soon. This is institutional movement. The reasons why people got into Asana recently are not to sell it in the next few days. So this is that initial traction that starts happening after the volume has dried up is not day traders. It's institutions starting to get hip onto it, and they're trying to build that up. And it's going to move like that. And then when it starts to become a story stock, maybe it hits a new all-time high, or it goes on something to get day traders' attention, then the day traders start getting on, and that's when you start to see maybe a little bit up of a pullback starts to happen eventually. Yeah. Eric and Christina traded that amazing. What are you talking about? You're at 200 in profit today. By the end of the day, 160 on Asana. Yeah, I had 210% at one point today on Asana, and then by the end of the day, 186%. Yeah, but you got to be willing to give back a little so you can get more. What is the yellow line over the volume chart? That's the average volume. I'll double click on it so we can get the exact figure. 20 is the 20 moving average. Isn't that interesting? So that's the wave contraction technique, where this is another aspect I taught in a different class. But part of that, what's going along with that, is the fact that the pullbacks are tightening. So this pullback here was 18%. This is significant in this strategy. 18%, right? Then pullbacks started to do 10%. So they're lessening, right? Then it did a 10% again here. And then a 12%. And I was thinking that, okay, that's not great, because you want to try and wait until your contractions are in the single digits. 1, 2, 3, 4, 5, 6, 7, 8, 9%. So 12%, I was like, but when it put in that low volume day, that super low volume day, I almost considered it peak to bottom of those two right there, 4%, like that. I don't know if you guys can see that little contraction right there, because I know that things can explode right after that. And I said 4%, let's give it a try. And so what we did is we got in, right there, and we set our stop to the bottom of that last wave contraction, 920. I believe that's what we did. Go back on the alert, we can check it, but it's okay. That's where I would put my stop, 920. I'm trying to draw this line. There we go. You see that? That's a stop. Bottom of the last pivot area there. Yeah, very interesting trade. I mean, it took us 20 minutes to go over it just now. I don't know, 10 or 20 minutes to go over it just now. It doesn't actually take that long in practice. For me, it takes less than a minute, because I'm going through so many charts, probably less than 30 seconds. I'm just like, I'm used to all these tools and stuff. You can probably do it in less than 10 minutes for sure, less than maybe 5 as you get better at it, because you just got, you want to analyze, and keep looking at it and try and find lots of things to card stack in its favor on the thesis of taking the trade. Hold on one second. Guess nobody was there. I thought somebody was knocking on my door. And then maybe they are. So we've done an hour and 45 minutes for this class. I don't want you guys to be up too late either, and we all need to get ready for tomorrow morning. I think if there's no other questions, if you want to try and think of if there's some kind of burning question, ask it now. Otherwise, we're ending in a moment here. Now that I know about the technicals for swings, I'll trade a lot more of them. I thought they were riskier than day trading. It's clearly the opposite. Jamal, 100%. Yeah. But that's in the market mastery, is you need to look at the one called your life portfolio. Your life portfolio. Make sure that's one of the ones that I recommend everybody watch right away. Your life portfolio. You're welcome. Jamal, be careful with options, especially if you buy out of the money. If it looks tempting and cheaper, the longer time frame, you may lose everything. That's right, Christina. Is that your own program that shades? No, it's not. This is TradingView. Oh, I think my cats are playing with the thing over there. What's a good index fund to invest your IRA money into? Just put it into VOO. Just VOO. Thanks. Good night, Kathy. All right. You're very welcome, everybody. Yeah, a little bit all over, a little bit, I don't know, kind of like cursory overview of like a bunch of things, perhaps. How you feel about it, but I hope that was really helpful. Okay, cool. Very helpful, you said, yeah. Is this a custom setup? No. This is just TradingView. Over time, I've tweaked it to myself. See you in the morning. See you later, Lishi. Nice to see you, Lishi. Solomon, thanks. Good night. Excellent visual, easy to understand. Yeah, I hope it really makes you think about looking at charts differently and you can find high quality charts now. All right, you guys, have a good night. And meeting. Good night. Thank you. Sleep well, everyone.